Hello and welcome to another update video about Ethereum. We are still most likely in this wave 2 correction, at least that's my current interpretation. But there are two scenarios. There is one short-term bearish one, and that is at the moment the primary expectation or the primary scenario, because we are below resistance and price is just moving in corrective wave structures. So there is currently no evidence that Ethereum has bottomed, but obviously it could have, which is also why we have a short-term bullish scenario, because first of all, it reached our trend reversal area on the 12th of May. It's the area where we expect a reversal, somewhere here between 1754 and 1534. It touched exactly the 50% retracement level. Then the move of the 12th of May to the 15th of May high was just a three-wave structure. So while I can count that as wave 1, which would be indicative of a breakout, and the wave 2 here, that would be the wave 2, the low of the 25th of May, is basically too low, a little bit too low. Again, it's possible for a 1-2 setup, which is what you need for a breakout, but it's just not super likely. And then we would need a third wave, a fourth, and a fifth. Problem is with this retracement here, which occurred overnight, or not really retracement, but setback or rejection, that was a bit too strong for further continuation in an ideal breakout structure. So while the breakout structure that would be possible was already very messy, it just became more messy. Okay, so it's just that sure, a breakout is always possible. Anything is possible in these markets. Please, please, please embrace this. Embrace this attitude that anything is possible in these markets. But we're obviously dealing with what is likely and what are the relevant invalidation points and levels where probabilities are shifting. But literally anything is possible, but not everything is probable. But also a bullish breakout is still probable. I just find the breakout or the breakdown more likely, okay? If the bullish scenario wasn't likely, I wouldn't even show it to you. So again, we have this situation that we're coming down off the April high in a WXY correction of wave 2, which should afterwards result in a third wave rally. In this wave 2, we have a WXY, as I said, and we are in the Y wave, in which we have an A wave, a B wave, and the C wave could have started. So we are going to zoom in. This is the short-term bearish count, which suggests that off this swing high of the 28th of May, we already came down in a wave 1, had a wave 2 to the upside. This could now be a third wave in the making. And in the third wave, we have a 1-2 already complete, a third wave of a third wave already complete, and we might now be in the fourth wave of the third wave. I did calculate that earlier today, already communicated on Discord and Telegram that the resistance for the wave 4 here is between 1873 and 1881. And if price gets rejected here, that would be perfect, or below that, and we could continue our move down in a fifth wave of the third wave and just continue the path down. So to make it very simple, below 1881, further downside is expected. A break above 1881 would be the first signal that something with this count is off and we're derailing and might see a little bit more of an extension to the upside in an even more messy pattern probably. And then we deal with resistance at around 1915, and the next level afterwards would be 1962. Yeah, what would be the bullish count? Short-term bullish, I mean, they are both embedded in a bullish structure, but what would be the bullish breakout count? Well, the only way to really make it work is to still count the move up to the 15th of May as a wave 1, then a wave 2 down. The wave 3 would be in the making, 4 and 5. But the wave 3 would consist of an ABC or WXY. We only had 3 waves up, so it would need to be wave W, very messy, honestly. W, X, and Y. And if we now rally, this could be a Y wave, So yeah, prepare for the chop. I mean, that is what we've been talking about for weeks and weeks, that this is going to be a rocky road. Unfortunately, the easy ways and the clear ways in which the cryptos have traded in recent years, I think for now, at least at the moment, they're gone. Hopefully they come back, but yeah, everything should be clear now. So hopefully you have understood the relevant levels, invalidation points, and so on. Important is, and that's maybe sort of the last comment, that as confirmation that this is really the C wave to the downside, and that we're finally following through here. No, not the C wave, the C wave, A, B, C of wave Y. What needs to happen is really a break below that 1740 level, 1739, the 12th of May low. Until we break below that level, literally the chop can continue, yeah. Okay, that's my update about Ethereum. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.